You're gonna hit the record button. Let me turn off this music I'm playing in the background for YouTube people with a copyright. So, what's going on, y'all? Friday night class. You know how we doing it. Today I'm gonna go over some spy strategies, but these aren't strategies that I've already tested out for a spy. So this is kind of gonna be a look at one, how you can test strategies for yourself, but two, actually seeing if there are some things we can carry over and then potentially use in the market, right? So it's kind of like a live back testing, but sort of also looking at strategies. And if you got questions, always put them in the chat and I'll circle back to them. We can always do that. If you want to speak, raise your hand on the Zoom. We can do that so that way we're not unmuting. And I think I did. Yeah, I made it so y'all can't unmute yourselves in there. So, all right. So one of the things when you have your strategy that you're working on, you know, you want to build out a strategy regardless. We did a voice the other day talking about stop losses, profit taking, things of that nature. And one of the things that we came up was the idea.
You want to get something to go?
Yeah, or mental take profit. Get them nachos. So the thing is, what you want to do is you want to make sure that you have something that you can consistently track and consistently do and consistently replicate, because you don't want to end up mentally doing something great, making money or finding success with it. And then you're like, well, damn, how'd I do that? You know what I'm saying? There's probably things that's happened over life where you've been like, yo, that was dope, but I don't know how to redo it because I just kind of did it. All right. So with your trading, you want to be able to do that on both sides. If you do something wrong mentally, you know, you want to be able to go back and say, this is what I did wrong. Let me write down, make a note, and make sure I don't continue to do it, right? So when it comes to strategies, and I don't really just care for indicators that heavy, but I do know, and I have tested indicator-based strategies. What I was going to look at was testing two things out with multiple time frames, but using multiple time frames as a strategy, and then using indicators on the multiple time frames as a strategy. So what we're gonna do is this. I'm gonna take it back to the beginning of the year, SPY. And what I'm gonna look for is these are 9 and 21 MAs, which I hear people talk about a lot, so I threw them up here. What I'm gonna do is this. I'm gonna mark whenever we're over the 200 MA, which is purple. I'm gonna mark it up for calls when we have a bullish cross, right? So green is over the red, and put a line there, right? And when red is over green, which would be around here, I'm gonna mark it red. We only take those trades. We're only gonna take calls over this though, so this wouldn't even matter. But that's another thing you could test too. Screw it. We'll test that. We'll test it without 200 in it. So you're only taking it crossover, just strictly crossovers. Put a red one there. And we have any more bearish? We had a bearish cross here, it looks like. And then if we slide out some more, we had another bearish cross right here. All right, and then I'm gonna come through with the bullish crosses. And what we're gonna do after this is I'm actually gonna take it down to the 1 hour and see what crosses we get on the 1 hour that could potentially lead to entries. So the entries would be trading the moving average crosses on the 1 hour, but they have to be in line with the overall cross on the daily, right? If a bullish cross on the daily, we're gonna wait till there's a bullish cross on the 1 hour, enter that. So we already marked that up. We got them all marked: bullish, bearish, bullish, bearish, bullish, bearish. Cool. All right, so I'm gonna slip over to the 1 hour. Let me go on over to January. And again, if y'all got questions, put them in the. But I think this could lead to potential strategy, and I'm gonna track it out, so we can really see like the results, and you can really, you know, walk off of this Zoom with maybe a new way of looking at stuff. And of course, you can apply it differently. I do have my extended hours on, As I'll take that off since you can't trade during that time. I'm tripping. Boom. All right. What color line is 9 EMA? Green. 9 is green. 21 is red. So if you're using indicators like MAs, I think it'd be helpful to color them according to what you're looking at, right? So a bearish cross would mean the red is over the green, just to kind of correlate bullish bearish. So we have our lines laid out based on the daily time frame, right? And so what that looks like is when we have this green, that means we're only going to be looking for calls. When we have red, we're only looking for puts, right? And those lines are put on there from the daily. So if we have the cross on the daily and we have the cross on the 1 hour, and we enter the trade, you would exit the trade upon a reversal of the cross. And there's different ways you could test exits, right? So right here, you can start testing out take profit thing, all type of stuff. So you had it over here on the daily. You had your cross happen red. So looking up here, red is still over green. So right here, right? So this candle would be your entry candle. You had the gap up the next day, but you would have crossed out right here, right? So you enter what we got, longs, enter longs on this candle. Let's look at this. And so this is something, again, this is literally like behind the scenes type of stuff that I'll look at, you know, when I'm actually looking at potential strategies or things that I'm doing, right? So you would have ended up getting out on this candle here. This candle here. Tragic. So that's testing this out, that entry, this exit. So you had a peak of going up $2.55, drop down $3.85, right? So when you're looking at options trading, this is what I'm saying. We're looking at the price, we're analyzing the price, but it's all the different factors that come into play when you're options trading. You know, are you taking profit? What does the profit look like? I'm not about to pull up a separate contract chart to control and try to match the contracts, but say green. Oh, yeah. What I will say is with that one right there, if you were taking profits, you know, you would have won in profit. So that's what we can look at is wins and losses. We can look at profit, and then you start looking at, can I try this out in real time? All right. So if we do this and we look at this and we say, man, that's a lot of losses, or man, it immediately goes red for a day, then it's like, it's not worth trying it out. But if we see that you entered on this candle or this candle, held it, next day you had the gap up, you could have took profits there, or it dropped back down. If you're using the trailing stops like we talk about, then you would have been good as well. So we'll count that as a win, albeit a small win. Drop, drop, drop. So you're just trading calls, enter calls here, right? Because we're still in between this green. So there's the next cross right here. You enter calls, same situation. All right, so cross right here. Enter on the close. It crossed back here. And then you had another gap up, right? And you went as high as 3.9 just about. And this candle, the cross. Yeah, right here. So this candle cross. So going off the crosses, dropped down $3 after it went up $4. So again, thinking about options, thinking about trading this strategy, you enter on this candle, on the close of this candle, and then you end up having a $4 move just about, you know, within the next 2 bars, right? So again, another win if you're taking profits, when you see profits, if you have a profit target, or if you're using a trailing stop or anything of that nature, very next day you're in profit again, right? Cool. Now on the daily, it's flipped bearish, right? And again, this is just looking solely off of moving averages, right? But this is how you test different things out to see if it's viable enough to be able to carry over so that you can have a strategy you can really hold yourself to, rather than just going off of randomness. So as you learn more, you know, you learn patterns, you learn price action, learn candlesticks, that's where you can add more things into play. But this is something you can test out. So crossed over on the daily, we see we're already bearish, right? Bearish cross happened back here. Now we're bearish crossing on the daily. So the larger momentum is moving in accordance with this. So you enter your short position. So we had our cross here. We enter short. And this would have been a maximum drawdown. And then if we're rolling with, so you're already in profit right here. You didn't take profit this day. You were down that day, but it continued down until it crossed over here, right? So again, this is, if you're taking profits early, you take profit, see profit, if you have profit targets, things of that nature, then again, big profits if you have trims, or if you're holding runners, I should say, if you're holding runners, SPY dropped $40, right? So far, that's a small win. So far we had a small win here. Yeah, pop questions in the chat as they come along. That's where levels come in place. Exactly. So that's what I'm saying is as you learn more and add more to your game, you can easily find ways to run this stuff up, and maximize the strategy, right? Different things like levels, different things like different indicators you might find. Looking at options flow, right? You're like, oh man, I'm in calls right now, but I see more heavy call flow coming in. I'm gonna stay, right? Learning different things that you can add to your game to make things better. So we got small win on here, gap up, small win on here, gap up, huge win right here, right? We're sticking to the that strategy. And this is assuming you take profits any day after the first day, you take profits, you up. All right. So that's potentially a huge win, if not a small win, but huge win if you ran with the runners. All right. That's when you also look at the idea of having multiple contracts. All right. And people who are building the accounts, a lot of times it comes up with, having at least 3 contracts is what I heard a lot of people say has worked for them, where they can have one that they lock in profits with or they trim. They have one that's, they're going to close out, and they have one that kind of just runs on. It's still just a way of scaling out a position. But that's what we talk about: multiple contracts, scaling out a position, having runners to continue to go on there if there's more profit to get. Or like I talk about, having a trailing stop loss where you're in all your positions still. Swing trading, you do want to cut some out, I think, to lock in some money from your initial investment. But you can let it run, right? And you could have caught a $40 move depending on expiration. All right, so that's the other part of testing the things out. So in the chat, we have somebody say, so using a daily, flipping to the hourly, what will be the option expiration you're using with options? So when I used to use a strategy very similar to this one, pretty much just like this, I think I used some different moving averages when I was testing it out. I usually would get, if it happened on a Monday or a Tuesday, I would get a same week. If it happened on a Monday or Tuesday, the hourly crossed in alignment with the daily. If it happened on a Wednesday, Thursday, Friday, I get the next week. And so the other thing that you're testing is you can also test the average time frame that will be the best time length to hold these out. So if you saw this one popped up next day, this one popped up next day, this one we entered on the 14th and closed out on the 26th. So that's days, right? Peak profit was 10 days. So then you're looking at, okay, 2 weeks out could work. Additionally, same week could work, again, depending on the week. It looks like even after 3 days of time on that contract, you'd be doing good. You got to look at your strikes too, and look at how much is moving. This moved $3, or this moved $4, this moved 2.5, this moved 40, right? So those are the things that once you find something that makes sense, like this one so far, we got 3 wins, depending on your profit strategy, but three wins nonetheless. You had the chance to take profits, so right now we're still looking for puts. All right, awesome, thanks, no doubt. I'm telling you, bro, I want y'all to be on here and make money. Get off my Zoom and go make some money, man. All right, so we're still looking for puts because, again, the daily trend based on these moving averages is bearish. We're not trading calls. All right, so we have this cross right here that looks like the green cross the red, then we cross back down. All right, so again, nope, wrong tool. Entering a short position on this. Dropped here. Max was there. All right, so not much profit. Yeah. Oh, I'm capping. So maximum profit you would have got would have been here, $4.38. It did go up the next day or next candle. Yeah, that was the next day. It gapped up $8. So you're in drawdown, and then it came all the way back down and retested. And you're $4.38 up from your entry. So the thing with this again is learning your candlesticks, right? And looking at the candlesticks, you see the gap up. One, have to know the way gaps work. So it's so many different components, right? So understanding how gaps work, SPY gaps usually fill in the direction of the overall, of SPY overall, in the opposite. I'll say it like this. When SPY is in a downtrend and you get a gap up, usually it fills that gap down. SPY is in the uptrend and you get a gap down, usually it that gap back up. SPY's in the downtrend and gaps down, it's not as often at the same day that it'll go and fill that gap back up because it's causing it to go against the trend. So just looking at that, and there's different things you can learn about gaps, but that's something that I've studied and learned about. So with this, understanding candlesticks, like somebody mentioned, understanding levels, obvious resistance right here, right? Obvious resistance, rejection, 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 right? So when this candle opens up and rejects, you're not worried. Can I repeat that about the gaps? For sure. So you're not worried, right? And then it does come back down into profit. So again, you have to create your own rules, but understanding candlesticks, understanding support and resistance, you will see that this candle did gap up. You enter puts right here. It gapped up, and I'm down, but it's rejecting this level. And that's where you as a trader are like, am I going to average in? Let me see how this candle closes. Oh, huge inverted pin bar, huge inverse hammer, whatever you want to call it. Huge rejection of the resistance, right? Forget the candlestick name. What is it? It's showing you sellers are taking over and pushing down from that level. You average in, you stay in, whatever, or you hold steady, and then you flip back green, right? Now with the gaps, what I was saying, for SPY, there's a couple of different things. So looking at the 200-day moving average on SPY, what I found is, and I did go look into it, but I also looked at myself, when SPY is over the 200 moving average, which means it's typically in the overall uptrend, right? And it gaps down in an uptrend, usually it'll fill that gap back up. Granted, the bigger the gap, the less likely it's to fill that same day. Usually the bigger the gap, obviously, the longer it's most likely going to take for it to fill. Because of course, having price have to fill this big of a gap versus small little teeny gap, it's more likely to fill a small little gap quicker. So overall trend, right? If it's in a downtrend and then it gaps up, it's most likely going to pull back and close that gap and continue the downtrend. So just a gap in the opposite direction of trend is more likely to get filled than a gap that's in the same direction of the trend, right? And that's in line with just trading with the trend as a whole. So we have that huge win. We have the small win. We have the small win. Here we go. Quick drawdown next day. On gap up. Another thing about gaps is most of SPY's overall movements over all these years have been at the gaps. That's where it gains its most ground. Quick drawdown next day on gap up. Came back down to profit. All right. So again, see here, we had the gap up after our entry. Then it came back down to profit. Here, huge win, small win next day on gap up, small win next day on gap up. So again, as you go through this, you're like, man, okay, let me figure out some different ways to, set this up. How much is a small gap? How much is a big gap? It sounds like y'all want me to teach a class on gaps. And looking at gaps, so I guess I'll leave it on this chart. The gaps that are most likely to fill on SPY, regardless of trend, they're more likely to fill when they're within the range of the previous day's candle. So to put that into perspective, the 26th starts here and goes to this candle, right? So this is the 26th. And then this candle gapped up, right? Next day, 27th, gapped up, but it's still inside the range, right? And maybe horizontal would have been better to show. It's still inside the range of the 26th. Those candles that open up with gaps in either direction, but are still inside the range of the previous day, are more likely to fill, right? Class on gaps will be dope. Okay. Hey, I'm gonna make I'm thinking about making a channel in the Discord for class ideas, so that we can know what y'all want. But I will put that on my whiteboard. So, yeah, I'm playing Gap Band the whole time in the background. All right. Anyway, so we're still so that's the example for you, right? That's how some things I've noticed with gaps, and that's how a lot of times when I do trade. If I'm making a trade immediately at open, it's a gap trade based on the statistics, right? Knowing that certain days, as you move on in the week, I can't give y'all all the gap knowledge right now. Let me chill out. I know a lot of gap stats. Like I said, I'm a statistic. I like to trade with a lot of statistics and probabilities. Because at the end of the day, all it is really probabilities. You know, certain chart patterns perform better than other chart patterns. Certain indicators might do better versus other indicators. And a lot of them you can test. You can test, you know, a moving average with a 5 and a 10 versus a 10 and a 12 versus a 12 and a 30. You can test all these things and see what makes the most sense and what provides the best results. So moving along, what's our daily trend still? Because I put this just to show the day. So daily trend still bearish. Entered another trade here. We get this crossover. We're not trading that. Why aren't we trading that? Because overall, we're still bearish. Let me hit this gallon one time. Overall, we're still bearish, right? So not trading that, and that's fine. Wait for another crossover, which is here. This one, I probably would close this one. I'd be like, it's starting to consolidate. But this one, you get the crossover on this candle into here. Gives you very small profits. So this one, you can call it a win, you call it a loss, you call it a break even. I think most likely I would close this trade for a break even. Just being real, like real live, you know, live trading. We get a little movement down. You know, if you're trading, so this was February 1st, January 31st. So this was Friday, yeah, 28th, Monday, Tuesday, Wednesday, Thursday. Yeah, this was a Friday. Ooh, spicy. I probably would close this trade at break even realistically. You know, you enter the trade on this candle's close. It comes down $2.70. You're in a little bit of profit. And then it starts pulling back up. Then it comes back and it comes back down. So we'll call that one break even or a small loss. But hopefully y'all are getting the concept. Y'all have any questions so far? Any questions, put them in the chat. If this is making sense, put a Y in the chat. If you're like, Jourdan, what the heck you talking about? Put an N in the chat. And if you think you're going to make some money with this, potentially, if you're getting it, you like to make some money, put a $sign in the chat. If you're like, yo, I might be able to use this joint, Jourdan. Let's see what we got. We got Y's. We got the money emoji. We got the $signs. Money bag. Turn me up. Turn me up. This is G, bro. What we do, bro? You own the class. You get a bag. You get a bag for coming to class. That's how it works. It's quite simple. It's quite simple. Show up to the money class. You get a bag. Cool. Why? Money sign, money sign, money sign. Cool. So y'all are getting it. It's helpful. It's making sense. Wouldn't you enter the hour after the line crosses? You enter on the close. You enter on the close. So as soon as it goes, Dana, good question. Dana said, wouldn't you enter the hour after the line crosses? Is that a delayed indicator? So moving averages are lagging indicators because they go off of price and then, you know, if they have to close. So the lines cross once that bar closes. So as soon as the bar closes, this one actually, because this is the end of the day, that's one of those ones for the sake of the test, we'll move it right here. But yes, so you'll see the lines cross on the count. So there's different ways you can do it. One, if you have your computer up during the day, if you work from home, things of that nature, double screens, right? You can have it pulled up. You can get fancy with it depending on your trading view, you know, and you can have a bunch of charts. You know, you can have 6 charts pulled up or 4 charts pulled up, you know. All right. So you can have all that stuff. I guess I need to upgrade my plan to get all fancy. But you can have all of them pulled up and you can have stuff like that. Right. These are 9 and 21 EMA. Correct. But yeah, so you can have that, or you can have an alert set, right? And so you can set alerts where I want you to let me know when the 9 EMA crosses the 21, right? And that's how I like to do a lot of my alerts. So when it triggers, once the bar closes, right, it's gonna tell me buy SPY calls at the money 1 week expiration. Bam. All right, so you get the alert trigger, you go ahead and you check it out. You like the alert for the cross. Exactly. Lauren said, what makes you choose the 9 and 21? That's what I hear people talk about a lot. I think they do have something to do with fibs, but it's just testing. That's the beauty of testing, is we can run this same exact test and be like, well, you know what? Let's do, instead of 9 and 21, let's do 13 for one. And then let's do 46 for another. All right. You can do that. Can you do 21 with 50 EMA on the 5 minute? For now, I'm sticking to the 9 and 13, bro. Or whatever I had it on. 9 and 21. All right. But you can do the 21 with the 50 on the 5. All right. And that's the point of me showing this, is so that y'all can take what I'm showing and then go apply it. Right? Go test it out. Do it exactly how I'm doing it. And you can see the results you get. I see you over there smiling, Moody. All right. So all right. So then we had this period of consolidation where you see it's just moving sideways. So that's something where, you know, you would say whether or not you're getting false signals. Once you see it's consolidating and it's real tight, you really want to trade that. That again is trading knowledge, trading experience. You know that something's gonna happen, either way is gonna pop out, but you don't know which way it goes. So you wouldn't take any of these signals. These lines are just too tight. You're getting signals back and forth, right? So regardless, we're still overall on the daily. Remember these lines we said earlier? Daily is still bearish, right? Let's talk about chart patterns. What's this? I know y'all know what it is. That really was a rhetorical question. I feel like somebody gonna put it in the chat. All right, but you know your patterns. We call this the M for Martin, right? Ooh, I made that so ugly. M for Martin, MSC, you know what I'm saying? That's a double top, exactly. Let me go ahead and get that off there, because that was like, so it's a double top, right? So knowing your chart patterns, understanding support and resistance, things of that nature, you see that already, and you wait for another cross that's not all mumbled up like this. And here we have it again. We're still overall bearish. We get the cross right here. The cross, we get the cross here, 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 here. Yeah, here. This candle crosses. That's our entry candle. All right here. Close of the candle. What's our drawdown? Maximum time we go down, boom. Had a little pullback right here. And then how far does it go down? Potential profit, boom. $14 move to the downside, had a $2 pullback. So this, like, bro, man, somebody do this. Somebody do this next week. Somebody do this next week. All right. So let's run it back. And I would literally sit here and do this stuff like all night, bro. And then I'll be like, bet I got a new strategy for y'all. Y'all be like, oh my God, Jourdan, what's the strategy? This is it. I sat here and tested it. I know it works. So what? We get another cross here. No drawdown. Doesn't even make a new high. How low does it go? All the way down here. $29 move. All we've been trading is puts the past however many days. But like, that's how simple your trading could be. So this strategy, we just tested it. We have 1, 2, 3, 4, 5, 6, 7 signals so far on this strategy, right? And I'm not gonna run through it all day. Let me check the fill the gap, what you were talking about earlier. So we just tested 7 signals on this strategy. We had a small win, next day on the gap up. Small win, next day on the gap up. Huge win. Quick drawdown on this one that came back to be in profit. Had a break even or a small loss right here. A nice size win right here on a $14 move. That's honestly a huge win itself. We're gonna call that one a huge win. 14-point move is nice. We'll call this a yeah, you ain't put words to that. You caught $40 move on SPY. You ain't got words for that. Right? And then $29 move here. So that's, I hate to say it, like that's the class. You know, so taking that, and again, quick recap for those who are just coming on, quick recap for everybody. All I did was I popped on SPY, took it back, took it back to the beginning of the year. All right, took it back to the beginning of the year, marked up, call it crazy, man. Marked up based on the 21 and the 90 EMA, 9's in green, 21's in red. Marked up what direction the market was. If we're assuming that the 9 being over the 21 means bullish and that the 21 being over the 9 is bearish. And then whatever trend we're in based on those on the daily, we're going to seek to find trades using those indicators for our entries on the 1 hour, right? Can you use this for scalping? 1 second, Charlotte. So you can't. And this is the same concept that I was talking about on the voice channel the other day when I was talking about honing entries, you know, and overall just improving trading through different methods, like using multiple time frames, right? Because again, for us to get this big move on the daily, it has to happen first on the 4 hour. Before it happens on the 4, it happens on the 2 or the 3, happens on the 1, happens on the 30, right? And so that just helps you hone in again. But let's look at this. You could have traded the cross on the 30, right? Same thing. You could take it even. So we're going, this is the other thing I actually did want to show. This was planned. So I'm glad you asked about it for scalping. So I'm going to take everything off. But remember, we ran 7 signals. And I think we had 1 loser. So you went 6 and 1 on this strategy. 6 and 1. Right? Take all that off. Quick math. Just for the signals that we looked at, 6 out of 7, 85% win rate. It's not that hard. Respect. All right, we're just gonna look at a month. So June just passed. June was a crazy month. So we'll look at June. What EMA? Look at y'all. Why you're late to class? No, I'm playing. The red is the 21 EMA, and the 9 is the green one. 9 EMA, 21 EMA. 9 is green, 21 is red. What indicator is the red and green box that I use to measure the move? So that's when you come over here, that's where you can use different measuring tools, right? So what I was using was a short position, right? Enter here, you can move it down. So it helps you understand your risk to reward ratio and what you can expect to gain based on certain movements that happen, right? You could also use it when you're marking out levels and see, you know, from a move from, if we see this clear resistance, and we say whatever, right? We call this support, right? And we can say, okay, if I'm gonna trade this rejection of resistance right here, rejected resistance had a crossover, I'm taking it down to support. Even if these candles aren't here, you know that's a 5.6% move, right? So You plan accordingly. So much learning, love it. Thank you. No doubt. You hop on class, you leave, ready to get it back. You know what I'm saying? That's what we do. That's what we do. That's what we do here. Man, come on, bro. It's so much money. My dog. All right. So let's talk about it. We're gonna run it from June. All right, we're gonna run it on June. We're gonna use the 30-minute, we're gonna use the 5-minute. 30 minutes is gonna show us our overall trend. 5 minutes is gonna give us our entries, right? So right here, we have a bearish cross. So we'll mark out the bearish crosses on a 30. Got a bearish cross on the 30. I don't know what the heck is going on over here. That's a bearish cross. Let me zoom in on this more. Where my glasses? Why are we having fun on Zoom? We got a bearish cross here. We got a bearish cross here. Are we still in Zoom? I mean, are we still in Zoom? Yeah, we're still in Zoom. Got a bearish cross here. Bearish cross here. And that's it. Welcome to a new month. All right, so we marked up the bearish crosses. We'll take off this horizontal line. We don't need that. Mark up the bullish crosses real quick. We got a bullish cross here. Keep in mind, to answer your question, you're gonna always have more movement on the smaller time frames, and having more movement on the smaller time frames can lead to more false signals, false moves, because you get a lot more fake outs. Keep that in mind, but you can use this. Bullish here. Bullish here. Big drop, big drop, big drop. Big bags. Bullish. And this is literally, like I said, like, stuff I would be up doing. And I would take it and test it on different stocks and different sectors and industries to see if there's any certain sectors or industries that, you know, run like this, or use the ETF for those industries. You know, use XLK, use X, you know, all those X and XLF, you know, for financials. And if it works for financials, then go pull it up on Wells Fargo or JP Morgan and see if you can catch a bigger move, you know? Not Wells Fargo, but JP Morgan. We got a bullish here. All right, let's run it. What's my YouTube? I think if you just search my name, you probably find it. I don't know, bro. Go to my video lessons and you'll see links I've dropped to the YouTube. So, all right, we already laid it out. So we use the 30 as our overall time frame. Then we're gonna pop down to the 5 and use the 5 for our entries. All right, same exact concept. We'll run some signals through it. Let's try to run 10. See what we get. I'm sure there's an easier way for me to slide through it. Yeah. I'll just do like that. Bow. All right, cool. So let's get it. All right. Get the cross on the 30. 30 cross enter. We're already bearish on 5. We roll with the bearish on 5. Enter on the call, the close of that bar. Boom. What's our drawdown? No drawdown on this trade. Automatic win, right? Got the cross on the 30. We're already bearish on the 5. Drop down another $2 and about 95 cents. That's a win. All right, so these would be day trades. That's a win. Cool. Let me mark out the matter of fact, $2.95. All right, cool. Not taking this trade here because we're still overall bearish. Get another cross right here. Cool. We go short. Get the cross. Enter the close of the candle. What movement do we get? So it depends on if you're day trading this or you're going to short term it. Let's just take it as a day trade though, right? You asked about scalp specifically. So this would be the 5 minutes. So these would be day trade. Could possibly be scalps. Thank you, Lauren. Trinae asked, can I explain how I play the June 23rd cross? Trinae, are you asking about the 1 hour entry? And I'll circle back to that. Be as specific as you can in the chat so I can know exactly what you're talking about. So here we go again. Entry on the 5 minute, still bearish overall. It does not come back up and break that high. So again, you're pretty much instantly in profit. $2 move, it does come back up. You know, you scalping day trade and you already out. That's another win. Win. $2.08. So this is when I'm putting this measuring out, what I'm looking at is because you would have to test out to find what makes the most sense for exit rules. I would, when I'm using strategies like this is still where I would probably do some sort of, I would still use the candlesticks, but you can also use trailing stops, right? But just going off of I'm taking the concept of you don't even know how to trade for real. But even if you don't know how to trade for real, and I said, hey, Moody, for example, thanks for being my example, Moody. Love you, bro. Hey, Moody, you don't know how to trade, but when you see the green go over the red, put a green line. You see the red go over the green, put a red line. And then go to the 5 minute. And then see the red go over the green, right? Like the same thing. Simple enough. I think that anybody on this Zoom, even if they were in high school, could see this strategy that I just explained and run this strategy, right? And you had no drawdown here. You entered, it didn't make a new high. It just immediately went down. You entered here, went down $2, all right? So that's what I'm basing it off of. I move it down to the low, and just about, but you $2 profit. We're talking about, the question was about using this for scalping or shorter term trades when our first one was more of a short term swing. So here we have 30 switching bullish, right? You get in here, long position. You get in here on the close. Oh, no, this is where it went bullish. So it closed here bullish. So you get in on the close of that candle. All right, this is your drawdown. It came down 50 cents. And then after that, and this is, up to you on how long you hold it. Right? Let's just say you held it to the end of that day because you're day trading. So the end of that day is all the way out here. Damn, you ran it up. So end of the day here, you caught a $6 move. All right, and that's where, like I said, learning candlesticks, trailing stops, all of that. But even if you didn't catch the $6 move, you still caught a $2 move. Even if you got out in 15 minutes, you caught a $2 move. All right. So that's another win. Caught $2, caught $6 if you held. Win, $2 move. 15 minutes. It was either 15 or 20 minutes. Do that. All right. So far, we got 3 wins. So far, we traded puts, calls. All right. We get a bearish cross. We're not trading a bearish cross because overall on the 30, we're still bullish. So we're not trading this. Let me check the chat real quick. Might be a basic question about how do you plot a vertical line on TradingView. On my MacBook, I hit Alt-V. Is that what I hit? Yep. I hit Alt-V. I think they have some ways you can set up your like hotkeys, but they also already come with some. All right, so like this is MacBook language, but just certain buttons you hit, right? So Alt-V, Alt-J, Alt-H will give me the horizontal, Alt-H, that's Alt-J, right? So if you're not using a MacBook, I think it might be the control. I don't remember. But yeah, just go into TradingView, go over here, and you'll see it laid out. If they have certain hotkeys associated with them, right? So here we go. Bearish. I'm gonna do a couple more. Want to get a loss. So this one will probably be a loss. So bearish cross on the 30. Enter here. Oh, yeah. That's the low. Where's the high? So you had a drawdown real quick, came down. You caught maybe 80 cents. This will be one of those trades that will probably result in, unless you're truly scalping it, might result in you having a break even or a small loss, right? As we zoom in, we see that it did cross back over here, so you definitely would have gotten out if you didn't get out here. So small loss here, came back up, you gave back at the most possible, you gave back 65 cents, but you went up 80 cents, right? Yeah. I don't see Trinae following up on her question. So is it still making sense from the shorter time frame side? Is it still making sense? Can I get wise? Is it making sense in general? I just like checking in, making sure that it makes sense to everybody because I want y'all to get this. So this is a small loss or a break even. You did have a win, depending on how you played it. But let's call it a small loss. All right. I need this recording, missed half the class. Why do we enter that one without the cross? It crossed on the 30. So we're trading the crosses. It crossed on the 30 bearish, and it's already crossed bearish on the 5. So 5 is already in downward momentum. So we're still taking it. Somebody just said, take them under my wing. I've been thinking about bringing the mentorship back. I'm gonna say that I was doing mentorship before, but then I also stopped. I might do it again. I don't know. We'll see. If y'all be interested in mentorship, DM me on Discord. I think the problem was when I was doing it before is, I think the real problem, I'm gonna go back, get back to class. The real problem I think was that it was priced too low. And so people were getting in, but they weren't as serious. You know, when you buy something that's like $5, you treat it like it's a $5 thing. You buy something that's $1,000. You're like, hey, bro, you better put that down. Don't touch that. That's my fine china. You can mess around with them other little paper plates or whatever, right? So I think that was the problem I ran into. People wasn't taking it seriously enough. They wasn't executing on stuff that we covered. And I was like, bro, you wasting my time because you really could be running it up. I'm sitting here teaching you the same stuff I'm doing. How it really made me mad. But I had to learn that, you know, everybody ain't gonna be as serious. And people honestly just like getting that little dopamine hit when they think they're moving towards something, but then they don't actually continue. I'm like, bro, I'm not gonna teach you this just for you to not get this money. I want, you know what I'm saying? So DM me on Discord if you would be interested in some sort of mentorship. We'll talk about it. What other questions y'all have about what I'm showing y'all so far? Is it an early entry when you are red at the entry? So Carlos, good question. I'm gonna answer it both ways. I want to think that you asked it in a sense of these zooms are like gold. Appreciate you, bro. I want to think that you asked it like, because we're already bearish on the 5, is it an early entry instead of waiting for another bearish crossover? That depends on you. That's why we test, right? I personally would take it because we're still in that downtrend anyway. Because we're trending down on the 5, when the 30 crosses over, I'm fine with taking that entry. And like we've been seeing from testing this, regardless of time frame, we usually still end up getting profit. So this would be something that you could potentially have a rule in place. And this is how I would think about it, whether we're doing the 30, the 1 day and the 1 hour, or the 30 and the 5. We noticed that we usually do go in profit. None of these trades have resulted immediately in losses. That's where you could use a profit target and say, yo, my profit target on the scalp side is 10%, right? And once it's at 10%, I use a trailing stop loss. I'll take some profits, trim some contracts 10%, and then I'll use a trailing stop loss for the rest of them. And even if it comes back down to break even, If I got 5 contracts, I pulled 3 of them up 10%, and I got stopped out of the other ones that break even, I still made profit, right? And so that allows me to continue to stack and compound my account, right? The other way you might have meant it is it an early entry when you are red at entry? And that might mean if you enter it and are immediately in the negative, is that an early entry? I would say no, because you're moving based on the strategy, right? So as long as you're staying true to what you tested and has shown to work, it's not an early entry. You don't know what's going to happen. You know what I'm saying? So if you can see the future, if you saw the future and knew what was going to happen, and then you did something differently, that's an early entry, right? But if you're trading based on your strategy and in line with what you've tested to work, it's not an early entry. It's not. It's the correct entry for your strategy, and you might experience slight drawdown. But then, like we're seeing when we're testing this, most of the time it's reversing, right? And that's with any strategy. There's not an early entry if you stick to the actual strategy. Why? No, not why. The second one. Okay, I'm glad I answered that for you, bro. Yeah, bro. Otherwise, I mean, picture a world where as soon as you entered every single trade, it was immediately green and it never dropped down. You know what I'm saying? Highly unlikely. I'm not gonna say it's impossible, but highly unlikely. So things happen, you know, candlesticks happen, news happens, all type of stuff happens. How do you use a strategy while the market is actively open? Do you have to wait for a bull or bear cross on a 30-minute? Yeah. So like I was saying, when the market's open, right, this is what we do. So very simple, literal sense. We go to the 30, right? And this applies, right? So we go to the 30. Let me go ahead and take us to where we are for real. So right now on the 30, we ended with a bullish crossover. So what I would then do, if I'm using this strategy, right, I'll switch into the 5-minute, and then, when did the 30 go off? So the 30 went off here, so we actually missed the entry. 30 went off there, 5-minute. So that means you would have entered on this candle. So you would have already been in it. You would have took that trade out there. All right, so your entry would have been here. Close of this candle. Move this up. So it looks like it came back and retested the low after moving up some. Moved up about 80, 85 cents or so. Then overall, you ended up peaking out at about $2 and then came back down, right? So you would have already took this trade, already made money. You would have already caught this move. However, if this didn't happen, then all you would do is set an alert. And this could still be what you would do. Let me know when the 9 crosses the 21. Right? Set the alert. 9 crossing 20 SPY bearish. And then when that alert triggers, because then tomorrow, say SPY goes down. Right? If SPY goes down tomorrow, that alert is going to trigger when the 9 crosses the 21. And you're like, oh, it's bearish. Then you set another alert for when it crosses back up. And that'll be the same thing as those other crosses we were looking at, where we had, we had multiple crosses. So this one, if this was a bearish cross, that means we're already bullish. So like this one will be another cross you take, right? And any other crosses that come up that are bullish crosses, like this one right here, you take, right? So you take multiple crosses afterwards. So you would just wait. You set an alert and you wait. And that's why you can test this stuff out, test it on different stocks. All right. So like we tested it on SPY. You go pull up the top holdings in SPY. You see Tesla, you see Microsoft, you see Apple, you see Amazon. Most likely, you should test it. But most likely, if this works on SPY, it probably works on Microsoft. And it probably works on Apple. Probably works on Amazon if it works on SPY. Probably. But you test it to be sure. Right? And that's the beauty of having after hours. That's the beauty of it not moving right now. Is you can go and test. You can test it even if it is moving. But that's what you do. And then you set multiple alerts, right? You go look at stuff. Microsoft 5-minute. So Microsoft 30 was already up. And boom. Go for it, bro. What's up, Moody?
Oh, I was just gonna it was not relating to none of this, but I was gonna tell people if y'all like spy and things of that nature and y'all enjoy like learning about candlesticks, it's always good to look at the monthly candle chart on a new month and see what's happening. And you can also see like sometimes when the new monthly candle opens up and it's close to any type of small resistance, it normally breaks it and it'll run. But you could check it on the monthly chart. But I'll talk more about it when the class is over.
I appreciate that ad, Brody. So, basic question. Don't know if I saw those questions up there. Is that position? Yeah, I answered those questions. I'll answer them again. That position indicator is just based on where you move it. It's based on where you move it. All right. So if we're looking at a long entry, all right, it just calculates based on where you move it. How do you put the vertical line on TradingView? Again, Mac, use Alt V. You can also come over here and hit vertical line and plot it manually. And then you can also look at the hotkeys, depending on if you're on the Mac or whatever type of computer you're on. Do you have to set the alert on the 30-minute time frame for the cross? You can set it, depending on your TradingView plan, you can set as many alerts as you want. So yeah, what I would do is, right now, I know the 30 is bullish. So I will come to the 5 and just set the alert for the 5. But then if I go back, and you could set an alert for the 30, we could do the same thing. You can set an alert for the 30, but like that, Microsoft 30-man bear cross. Cool. So that's gonna alert me when the 30-minute cross is bearish, and I want you to alert me when Microsoft. Come on now. You're not pulling up my alert button. All right, I don't know why my alert button not pulling up. But you would set another alert for the bullish.
Hit the plus button. Oh, there you go.
Is there what?
I was gonna say you could just hit the plus button as well, like where your cursor's at all the way by the prices to your right.
X. But can I? You know what I could do? I could come over here and do it too, huh? Add an alert. It's not popping up on my screen. It's all right. You get the point. The answer, question's been answered. So that's that. Paper money on TD is great for testing. Yes, you can definitely test it. You set alerts. Do you always just set the option to alert when the bar closes? I personally don't, because I want to look at it live and I'll enter if I think it's going to close on a cross. So that way I'm entering early. So yeah, I will set it so that you can't set it for a bar close. That's what I used to do when I was at the office. I would set bar close. Once that goes off, I know the bar actually closed. And so now I have officially triggered an entry for the strategy. Good question, good question. So yeah, there we go. Got it. Thank you. For sure. Get your bag. Get your bag. Bag catchers. Name of the new group. So that's it. That's it. It's 10:06. We ran a perfect 1-hour class. If y'all have questions about other stuff, put them in the chat. Answer some questions real quick. And then y'all know how Club MSC get down, you know, y'all trying to rock with the party. You know what I'm saying? Sorry, I forgot I'm recording. I'm already starting to get a little loose.
It's party time?
Party time, bro.
Moody could talk?
Let me see if there's any more questions. So any questions? We got 30 seconds. If there's no questions in 30 seconds, then class is a wrap. Here we go. Lauren, you be hating, bro. You be hating on the 10-hour class.
Hate. No, that was me actually being excited and supportive today.
Lauren, come get a shot, man.
I'm already drinking tequila. Oh, we're still recording. We're still
Yeah,
recording.
okay, I'm stopping the recording now. Nobody is
I'm already drinking and smoking.